Daniel DiMartino Booth, and also introduce Main Street Asset Management, Aaron Gibbs. And Aaron, I want to get your thoughts on Sheila Bair's comments about, you know what, if we would allow rates to go higher, forget about the zero interest rate stuff, ultimately it would be better for society. But Wall Street, I mean, wouldn't they just go nuts if they had the notion of no free money?
I think we're finally coming to grips with that. There's still a lot of projections that say that the risk-free rate, right, your normal rate should be like 2.5, 2.7, and when the Fed's, is for, 5.25 to 5.5. I think getting to the idea that maybe the long-term risk-free rate should be 4%. And something much higher is going to take quite a while for Wall Street to really fully digest that this is just going to be much higher for a very long period of time, not just 1 year, not just 2 years, but it could be potentially, for the next decade.
You like certain small caps here over large caps at this point.
I think we have gotten to the point, and to the prior guest point about reshoring, looking at companies within the U.S. that can really take an advantage. Some of the small caps really are oversold. I mean, we're talking about some of these companies that they're trading in like single-digit forward PEs, really, really cheap. I like small cap industrials. That has a lot to do with reshoring.
Right.
Geo Group is global security. I think it's a great firm, just considering just the increased global conflict.
I saw small cap semis on your list.
Yes, I did, and that is a big exactly right. We didn't know that we had them locally. Here based on the East Coast, Vico Instruments. Forgive me if I'm mispronouncing it, but the ticker is VECO. They do materials for semis, and that's a lot about reshoring.
I think they make gallium arsenide, which was supposed to be a major replacement for silicon. I used to play the stock like 20 years ago. That's why I remember that. Okay. Let's bring Danielle into the conversation. Ladies, getting a little bit of green on the screen. What do you think, Danielle, the market's reacting to?
There was a nod. There was a slight, there was a verb tense change in the statement. Employment and inflation goals, it used to say, are moving into better balance. Now it says have moved toward better balance over the past year. You cannot get nearly 800 PhDs to ignore a big revision out of the Bureau of Labor Statistics that put that negative print in front of non-farm payrolls in the third quarter. They all like each other. They all make models together. So I think that acknowledgement is dovish, because they're acknowledging the past, because this is over the past year.
But again, and you brought this up at the beginning of the show. In reality, we lost a lot of jobs recently.
They had originally been reported as a positive 640,000 in the third quarter for all 3 months, and Q3 2023. That was revised down to a negative 192,000.
Right.
So we know that job losses ensued at some point in the third quarter of 2023. Again, PhDs cannot ignore this, and it means that rate hikes are not on the table.
All right. So Jay Powell will be stepping to the podium in about a minute. Aaron, what do you expect him to say, and what do you want him to say if that's different?
I think he should be more clear. I mean, they've been very hawkish. I think they should be really clear about the possibility of no cuts this year. Though we're talking about no rate hikes, I think we should.
How does he do that? Like he covers it with a cloth?
No hikes.
No.
But their language, they've been, basically every Fed official has been saying this. It's more and more likely to.
They have been moving in that direction, right?
And I think we should even should be hearing the words no cuts, zero.
Then that would get back to the credibility question. I mean, because they said 3 rate cuts. And again, maybe I'm being too hard on Jay Powell, but this is he has to live with the transitory thing. And I think the soft landing, immaculate landing, whatever they were calling it, is what makes that something that a footnote in his tenure at the Fed.
Charles, several meetings ago, you may recall, he synthetically created a new dot plot, even though there was no dot plot announced at that meeting. He basically said at the podium, had we released a dot plot this time, it would have been more hawkish. So he can certainly do the same thing at the podium this time and move the markets in doing so.
All right, folks, here he comes. Chairman of the Federal Reserve.